Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FXPesa. So thank you for joining the session. And this is expected to be one of the most volatile weeks that we have seen recently. And this is considering what's currently happening between Israel and Palestine, combined with other factors and events currently happening in the markets. So before I make any progress, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So hi, Leonard. I can see Muiti, Ruben, and Derek in the house. Thank you guys for joining and for your responses. I always appreciate having you in these sessions. Hi, Irene and the Emerald Schools. Hi, Caspar. So let's get things going. So I'll be starting by first looking at the economic calendar and the things that we are expecting in the markets this week. And once we go through that, then we also look at the current situation currently happening between Palestine and Israel. And once we are through with that, then we look at a couple of technical price action charts. So today, it's a bank holiday for a majority of the world, of the major economies, not the world. So we have a bank holiday in Japan, and this is happening all day. And this is in observance of Health Sports Day. So we also have another holiday in Canada, and this is in observance of Thanksgiving Day. And of course, it's the same thing in the US. They will be celebrating the Columbus Day. So knowing that we have a holiday in some of the three top economies in the world, and China was having a holiday all week last week, then this basically means that we expect very low or thin trading in the day. But then investors are quite concerned about what's currently happening in Israel, and they're trying to adjust their positions so that they don't take excessive risk as more developments happen and we get new information about the war. So we don't have much happening today. We already had German industrial production data coming in at negative 0.2%, which was a slight improvement from the previous reading of negative 0.6%, but still within contraction territory. So at 11:30, we'll be looking at the Centix investor confidence for the euro. Then later on, we'll be having two speeches, one from FOMC member Logan at 4 p.m., then FOMC member Barr at 4:15 p.m. We'll also be having IMF meetings happening all day. Then another speech by FOMC member Jefferson, and this will be happening at 8:30 p.m. And then MPC member Mann will be speaking at exactly 11 p.m. So going into Tuesday, we don't have much happening. We have NAB business confidence survey for Australia, new loans data for China, two more speeches from FOMC members Waller and Kashkari. Then we jump on to Wednesday, and this is when we start getting the real major market moving news as we look at the producer price index data for the US as well as the core PPI. So we also be getting the FOMC meeting minutes at 9 p.m. on Wednesday. Then we move on to Thursday, we look at the UK GDP data. Then later on, we look at the ECB monetary policy meeting accounts, or basically meeting minutes. And then the most important news for the week will be the consumer price index for the US, which is expected to slow down to 3.6% from the previous jump, which moved to 3.7%. We'll also be looking at the weekly unemployment claims, which are expected to increase to 216K. Then we'll be looking at the Chinese inflation, and this will be on Friday at 4:30 a.m. A speech from Bank of England Governor Bailey. Then a speech from ECB President Lagarde. FOMC member Hacker will also be speaking, and then preliminary University of Michigan consumer sentiment survey before we get yet another speech from Bank of England Governor Bailey at 6 p.m. on Saturday. So the IMF meetings are basically going for all week. So on Saturday will be the 6th day. So we will be expecting some data to be coming up from the IMF meetings. So knowing what we know, it basically means that this week, the key market drivers will be as follows. One, the producer price index and the consumer price index in the US, which is basically a measure of inflation in the US. Second, it's a price action traders territory because there is not much events currently happening in the week. And then third, the geopolitical risk arising from the current war between Israel and Palestine. So, well, I am personally not taking any sides. I've always sided with the people, the innocent people currently being affected by the war. That's where my heart is. Let's look at the impacts that this war could cause in the markets. So last night, I basically created a tweet where I'll be updating on what's currently happening. So for the traders wondering how the war between Israel and Palestine will affect the markets on Monday, the truth is nobody knows. Nobody knows how the markets will react to this news. However, there's quite a number of angles to focus on, knowing how the markets, how the war may impact the markets. So key developments to watch include the following, and one is Washington's reaction. And in this case, we want to know how the US is reacting to this war. So a support for Israel would likely lead to a rally in US defense stocks. This is a typo. It's supposed to be a rally or a gain in prices in US defense stocks. So these are major companies that are producing military equipment and ammunition, which might be in high demand as the US looks to supply Israel. So following President Biden's responses, we now know that the US is looking to support Israel with ammunition as well as military equipment. So in this case, there's a high likelihood we'll be seeing some volatility in these stocks. So Arish Ashkelon, which is basically an oil pipeline that moves through Israel to Egypt, and other oil pipelines may be impacted by this current war. So any impact on oil pipelines would likely lead to a rally in Brent oil. So this is also yet another typo. I typed this really fast. So we know that oil supply is usually very critical to prices. And the rally that we saw last year around February, March was as a result of the war in Ukraine between Russia and Ukraine, where the Nord Stream pipelines were basically bombed. And when they were bombed, this cut supply, basically leading to higher oil prices. So in this case, it's important to completely monitor and carefully track any developments that may impact any of the global oil pipelines. So three, we are also concerned about flight for safety. So we know that there is quite a number of companies that are operating within the area, companies operating in Israel, Palestine, and the surroundings. And these companies could be materially impacted in terms of their business environment and how they operate. And investors are very concerned about this, and they might be taking flight for safety. Also, fears of the war spreading to other regions surrounding Israel is also a real concern, and this might lead investors to go for safety. So investors could likely take flight for safe haven assets as the conflict intensifies. And these may include buying the dollar, which is currently a very strong currency with the high yielding bonds. So we could be seeing a lot of investors going to buy the dollar. Bitcoin has also been pretty stable, so we could be seeing a lot of investors taking safety in Bitcoin. And of course, the shiny metal gold also may get some demand as a result of the flight for safety. So number four, there is a very specific ETF or exchange traded fund that is offered by ARK Invest, which is one of the top hedge funds in the US. So ARK Invest has quite a number of ETFs that are basically invested in tech companies, and one of them is highly specialized in Israel companies, or basically Israel innovation. So there is a high likelihood that this index could sell off as investors take flight for safety. So it could open with a significant sell-off as investors weigh the impact of this war on Israeli companies. Then there is the issue of geopolitics. We know that countries are basically making announcements every now and then. Some of the countries are supporting Israel, others are supporting Palestine, and others are advocating for an immediate ceasefire, and that the two countries should sit down and negotiate for peace. So any announcements by the Arab League, which is a league of the top Arabic countries, then this could have some impact in the markets. China, Russia, or any other major military power within the region could cause market volatility. So stay safe and practice proper risk management. Remember, if you're not in the area, if you're not in Israel, if you're not in Palestine, you don't have the full knowledge of what's currently happening. And some of the content that we are seeing online might be misleading. It might be designed to evoke a reaction or for you to either support A or B, but it doesn't make sense to make a conclusion or to have any very strong opinions, especially when you don't have an idea of what's currently going on. So you don't have knowledge of what's happening. And from the lessons we learned from the Russia-Ukraine war, there is usually a lot of misinformation whenever there is war. We can see a lot of propaganda as well as deep fakes, as well as past videos being used to represent the current situation. So always be careful, especially when you are interacting with other people on social media, as well as sharing information. So going forward, there's quite a number of developments that have happened. So I've been posting them as in form of replies. So I need to check to see if you guys are seeing this. Seeing some responses here. Hello, Geoffrey. I can see Kadi, Martin, Lemuel, Edward, Drew. Hey, J-Squad. Gold is moving with the theme of flag pattern. Is that what you are observing too on the charts? Yes, I'll be sharing that soon. So let's get back to the developments that we have observed so far. So the first development that I noticed is that the US is set to deploy Navy vessels and an aircraft carrier close to Israel in a demonstration of support. So that's quite a big thing. So we know that the US is looking to support Israel. And as I mentioned, then there's a high likelihood that some of the defense companies in the US could be benefiting from this. So whenever the US is giving military aid to any country, what's currently happening is that the US will give money to its defense companies and then basically buy products from the defense companies and then distribute these products to the areas that need those products. So in that case, the companies that are involved in production of weaponry tend to benefit from that. So another key development, Russia hacker group takes down Israeli government website. Killnet statement, government of Israel, you are to blame for this bloodshed. Back in 2022, you supported the terrorist regime of Ukraine. You betrayed Russia. Today, Killnet officially informs you, blah, blah, blah. So basically, it's a key development that Russian hacker group is targeting Israeli government websites. So now that's something to be worried about. Another key development we have seen is that the US is deploying aircraft carrier as well as F-16s and F-35s to the Middle East. So with this currently happening, then we know that it's a full-blown support for Israel. And it boils to a strong confidence that US defense stocks could be performing really strongly. So we know that the stock market is not going to open on a public holiday. So the developments might start affecting these equities on Tuesday. So we expect big gaps to be present when the market opens on Tuesday. So huge development, and will largely not register on most radars. The Secretary General of the Arab League is flying to Moscow. The reasons could be obvious. So when you see the Secretary General of Arab League flying to Moscow, then we may expect a coordinated response between Russia and the Arab League regarding the current situation in Israel, and this could have some impact on the markets. Next development I've seen is that Israel's benchmark index, TA35, plunges over 6%, biggest drop since March 2020 after the Hamas attack. So the Hamas assaults mark the deadliest attack on Israel in decades and threaten to escalate into a broader conflict. So Israeli shekel has jumped toward 7-year low in recent days ahead of the scheduled reopening of the Israeli parliament later this month. So the Israel stock market is having such a huge sell-off. And at the same time, the Israeli currency is also weakening and it's currently trading at a 7-year low against the dollar. So then the next big thing happening here is that Congress has been buying war stocks. So many bought defense company GD or General Dynamics. Numerous Republicans bought heavy into oil plus energy companies with buys in ExxonMobil, this DVN, this Chevron Corporation, and so on. So Democrats bought cybersecurity like FTNT, and these companies lobby Congress heavily. So this is an index that basically tracks the activities of the US Congress members. And whenever they buy stocks, they usually report this. So we can already see the members of Congress who basically votes on these decisions, such as supporting Israel. And if they are buying these war stocks, then there is a high likelihood that these stocks could open and become really volatile tomorrow. Another angle to look at this, China's Hainan Airlines cancels flights between Shanghai and Israel. So whenever there is war, the war zone becomes very difficult for airlines to navigate or operate in. So for airlines that have been operating within the area, they could be materially affected. And this could create some trading opportunities for you, especially when you know what to look for and what airlines have been heavily affected by this development. So the last development I've seen is that Iranian officials say that if their country is attacked, there will be strikes on Israel from Lebanon, Yemen, and Iraq, as well as the sending of fighters from Syria. So there's already a risk that this war could escalate to other neighboring countries around Israel. So those are the key developments to watch for, and they could have a material impact on the markets. So there's also another roller coaster that is happening this week after the US House Speaker was voted out last week. And now we're expecting another election to be happening on Wednesday. And in this case, the House Republicans are expected to vote in a new House Speaker. So there are also speculations that the new House Speaker could be the former President Trump. And we don't know this yet, so we are following on the story closely. So House Republicans will gather on Wednesday, 11th of October, to hold the internal elections to nominate former House Speaker Kevin McCarthy's replacement. This is the first time in US history that a House Speaker was voted out of office. So this is going to be epic, and depending on the policies supported by the new Speaker, then we could be seeing some much needed market volatility happening this week. So now you know what to look for and how to get prepared for it. And the next part of today's presentation is basically looking at the markets and trying to understand where the markets may be headed next. So first things first, gold opened with a big gap towards the upper side. So the price at the end of the week last week on Friday was 1831, but the new price at open was 1845, which is basically a $14 jump. Then the price moved all the way up higher to around 1855. And since then, you can see the flag that has been forming on the 5 minutes chart. So if you go to the 15 minutes chart, it's also easier to observe. And you can tell that the easiest way to trade this is whenever the breakout happens. So if gold breaks to the upper side of this flag, we go for bullish positions. If it breaks to the lower side, then you go for bearish positions. So there is a high likelihood that gold will break to the upper side following the current momentum here. So gold was on a very strong bearish momentum, traded sideways for 3 days. And on the 4th day, it basically managed to break towards the upper side. And you can see the 5th day, we are moving higher. So it's more like gold has bottomed at that level. And from the daily chart, you can see it's almost at the support level, which we are expecting at 1805. So with the new development happening with the Israel war, the flight to safety might lead to further upside momentum for gold. So the dollar index also managed to rally right from the open of the day. So having opened here, this was the Friday's close, 105.8. We are already up at 106.2, and we could be seeing some further upside happening in the dollar index, especially as investors take cover from the current risk and uncertainty coming in from the Israel-Palestine war. So majors are taking a hit from the strong dollar. So you can see the pound opened with a gap downwards, tried to rally, but has continued losing to the dollar. I expect this to be a theme for the day. The dollar to continue strengthening for the day and the pound to keep weakening to the dollar. USDN is in a tricky position because we had intervention last week. So the market traded sideways for a while, managed to rally on Friday, but then today, the dollar is attempting to move higher, but the Bank of Japan is very straightforward with its policy. It basically seeks to keep intervening and supporting its currency. So the big risk is that the Bank of Japan might intervene again and keep pushing the dollar downwards against the yen. And this could be happening again this week. So knowing that today is a public holiday in both economies, then sideways momentum is expected. I don't expect anything big to be happening in this chart. So as for Euro USD, it's also the same thing as the pound. So opened with a gap downwards, attempted to go up, and is now considerably moving downwards. So expect the euro to continue losing to the dollar as we go forward with the day, as the dollar continues enjoying the safe haven status. So I expect a mixed reaction for USD CAD, where on one side, the US and Canada are both having a national holiday. But at the same time, we know that there's a strengthening dollar as investors go for safe haven assets. But then at the same time, the Canadian dollar is strongly correlated with oil, which is also moving to the upside. So oil is strengthening, Canadian dollar is strengthening, and both Canada and US have public holidays today. So a lot of sideways momentum is expected. I don't expect much volatility from this one. So we have already discussed gold. So for the AUD/USD, I expect the Australian dollar to continue weakening. So it opened with a gap down, attempted to go up, and then pushed further back downwards. And with a strong dollar, I expect some downside momentum for the day. So US equity indices managed to rally last week on Friday, but then we expect some form of reversal to be happening here in a negative correlation with the dollar. So same case as US 500, I expect this correction to continue. Notice the huge candlestick that happened at midnight or at market open. So we expect the price to continue erasing the gains that we saw on Friday. So it's the same case for the Dow. So it really attempted to go up, failed. And this seems to be on the verge of a very strong trend line here. So we can all see the trend line here, and the market attempted to break that trend line, failed, and is now moving back downwards. So expect the Dow to be retesting the last low that we saw on Friday. So Brent oil managed to make a big jump this morning. So right from the open, it literally jumped about 4.25% to around 87.36. So remember, last week was one of the biggest sell-offs we have seen over the year for Brent oil. And from the daily chart, you can see the big sell-off that happened, with the market maintaining some form of stabilization on Friday. So on Friday, the market did not continue selling off, basically traded sideways. And then we opened the market on Monday, and the market jumped much higher. So I expect oil to start recovering, especially considering the risks that are currently impacting supply of oil in the Middle East. And we could be seeing some further upside happening for the day. So I'll be watching this closely. So even though we are having this form of pullback, I expect this initial move to continue adding more pressure to the upside. So European equity indices, we have been watching this area as a potential buy point. So Friday was a very nice confirmation, but then today the market has gone back to retest the area. So I expect yet to see another support from this area here, and eventually the market to go up but it's also important to recognize that the market has really struggled against around this area for the French 40 index. So Euro 50 index, also, this was a buy zone. Market managed to make a good rally on Friday, but now we are back to the same point. So yes, here we go again. So we monitor the area yet again to see if there's a potential of the market bouncing off the area again. So as for the UK 100, we managed to find some good rally on Thursday and on Friday. So today the market has been attempting to go down, but notice how the lower prices are being rejected, which basically indicates more pressure to the upside. So we could be seeing the UK FTSE 100 beating the odds and managing to squeeze in a bull run for the day. So Bitcoin has been pretty stable. Big sell-off here on Friday and a recovery. Stayed stable for the weekend, close to Friday's close. And now we can see there's not much happening here. So as investors fight for safety, we should be looking for a potential buy zone here. So that's it for the week. For the day. We'll be having more episodes coming in for the week. And at the same time, it's important to notice that there is a currently bed bug problem currently trending in France. So France is basically going through an epidemic of bed bugs, and it's quite embarrassing, but we'll be following closely for more developments. What are the companies which largely affect the NASDAQ movement in the market? These obvious, these are the top tech companies in the world or in the US. So we are basically talking about Tesla, Google, Microsoft, Netflix, all those top tech companies, including NVIDIA, basically dominate a majority of the NASDAQ index, including Google. Where do you get all those information? Is there a website or something like that? No, I gather a lot of information from a variety of websites and then combine them into one presentation. Then there's a very nice question from Leonard. You've said the dollar is resilient due to the DXY rallying, and the other, you've said gold is expected to rally. The two not correlated. So as I've always said, correlations are not permanent. They are seasonal. So there's one season or period of time where two assets will be correlated, and there are periods when they will be negatively correlated, and there are periods where they will have no correlation at all. So in this case, we've been having this correlation between the gold and the dollar, where the more the dollar has been strengthening, the more gold has been weakening. But then now, looking at the demand and supply side, we know that there is a high demand for the dollar and a high demand for gold because investors are taking flight for safety. So that means that the correlation is broken, where dollar was going up and gold was going down, dollar going down, gold going up. In this case, you could be seeing both assets moving in the same direction. So thank you very much, guys. Thank you for your time, and I hope you have a profitable week. Remember to practice proper risk management at all times. And in case you have any questions, you can always feel free to ask live on the Market Snapshot series. So we'll be having another session tomorrow, and these will be happening at exactly 11 a.m. And of course, avoid any confrontational issues regarding Israel and Palestine. Just issue your support for the people and maintain a professional approach to this. So thank you guys, and I hope to see you on the next one.